Good evening, all. Ira Epstein with your metal market wrap-up, and I'm putting this out early. It's just getting on the 4 p.m. Central Time in Chicago as I have an event I have to go to tonight. Another contribution, if you will. Interesting day. Here we are on the 22nd of September, Thursday, and the market today, a minor bounce in the metals, not one in the copper, just sort of sitting here. I keep reading all these articles in copper. It's fascinating how copper is going to be in such short supply, yet the market hasn't come alive yet. So interesting. Dollar very strong. Today was a day of craziness in the currency markets as we had central bank after central bank doing everything. So we had the Swiss National Bank, we had the Norge Bank, we had the other day the Riksbank, we had certainly our Federal Reserve, the Bank of England today, Vietnam, Taiwan, just about everybody raising rates with the exception of Japan today, holding rates steady, but intervening and driving up at one point the yen about 90 higher from where it was. It was 71.89. Intervention rarely works. Intervention with doing something in monetary policy can have muscle, but intervention just to intervene and stabilize it when you're not changing your policy rarely doesn't often work. Turkey today, 80% inflation rate. So what do you do when you have inflation? You know what we're doing. Everybody else is raising rates. Not Mr. Erdogan. He instructed the bank and they did it. So they went from a 13% interest rate down to a 12%. Now we have a whole slew of other banks coming on board next week. But what the U.S. does is typically followed by most major banks. Japan's the exception as it's trying its darn hardest to get inflation to embed and really take hold. Don't know if it's ever going to do it or what they view by taking hold. Energies were up a little bit as the market is looking at the conscription of 300,000 reservists, other people in Russia to go to war with Ukraine. People, as I said yesterday, and there were stories about it today, how the air flights are selling out, trips by train, boats, doesn't matter. People are saying, get me out of here. 1,200 people arrested, supposedly. But remember, there's so much propaganda, I don't know what's real and not real from even our press. In any case, the market is fearful that what happens as you get going here is with those extra soldiers, does the war pick up momentum? What does the EU do? Are they going to put on the caps? They keep talking about that. I haven't seen it happen yet. Will Russia shut off their oil? So oil prices are wondering what's going to happen. At the same time, China's doing better. Their economy, they've gotten through this latest bout of COVID and parts of it are opening and there is demand showing up for more oil there. Interesting. A lot of twists and turns. As you can see, most of the market, you just got the settlement prices down sharply. So let's go to the gold chart. With all these banks raising rates, you can get short covering rallies, but it'll be very hard to get a sustained rally in the market. Sustained means you've really turned the trend of the market from down, and I don't think you'd question that the weekly chart of closes shows that you're down. When you come to the daily, you're just sort of churning. That's why I say you could get a short covering bounce here at any time. You have a pattern of a lower low and a higher high according to the swing line. Now remember what the swing line is. It's a line I devised, I gotta say, 25 years ago for my son. At that time was a very young boy. And I said, I could teach you to chart anything. And if you just follow what I'm going to show you and people show you a chart and you learn how to draw this, you can tell them is the market in an uptrend or a downtrend. And I said, what a great magic trick. And he learned how to do it and he's not a magician. Well, what can I tell you? But in any case, to have an uptrend, you have to have higher highs, higher lows. I have 5 rules that determine where the line is drawn onto each bar. I teach it in my charting course in detail so that you can do it first by hand and then let the indicator that I wrote, and it's in my charting software, do it for you. The next thing is December gold, okay, in terms of moving averages. Now we have the 18-day moving average here. We have the 100 and the 200. If we get a rally, why not get up to the 18-day average and fight a battle there? I can see that at any point in time. The market has been holding and paying excellent attention to not staying outside of the lower Bollinger Band, okay? And momentum in the market. Where are we? Well, if we take a look at momentum on the close today, we have both numbers under 20. Both numbers were under 20 yesterday, and both numbers were under 20 the day before, so it's embedded. Now, don't get too excited about that. The fact that the market today closed in the top quadrant almost of the market means that overnight, a steady to higher move, and if you take out today's highs, you probably go into the thralls of trying to lose that embedded reading, which I'd expect, and then you carry up to the 18-day average where the game starts afresh. That would be the ideal situation I see developing. The gold-silver ratio, silver is still stronger than gold. The lower this keeps dropping, just think of this. You need 75 ounces, 80, 85 ounces of silver to get 1 ounce of gold. So you are falling back from over 97 down to 85 at this point. And you can see silver is strong, but it's sort of a flip-flop. Be careful here. You're very overbought. You either embed or you're going to get a correction likely out of the market. In the copper market, the battleground is crystal clear. It's the 18-day average of closes, but now that the Bollinger Band is wrapping up to it, be very careful here. Markets don't like to stay under Bollinger Band, so that's your support. If it breaks, look for that. More likely, I think the market's going to try somehow to get over 350, 580, negate the downtrend, not be in an uptrend because you got immediate resistance above you. Just not the place to be. The platinum today, well, first, what did the red line do? Red line closed 79.61, underneath 80, but not under 79. When you reopen, I expect tonight you lose the embedded reading right away. And if it's lost, then I'm going to look for 873.5 or wherever the 18-day average comes in. You'd have to see this market all of a sudden pick up immediately, not play around. I'm talking gap higher and keep going higher to probably keep that from losing its embedded reading. That's very often the pattern that you get. In the palladium market, you're stuck at the 18-day average. The market keeps coming down to the 200-day average. I think you can see it, that light gray in the 18. The trend is up until you take out the 2080 level with a target if the market can move up, and that's the big question, at 2272. And in the US dollar, you're over the upper Bollinger Band, you're overbought. No, I'll let somebody else own that if that's what they want to do. You generally don't stay over the upper Bollinger Band very long. You can, and you can run it like you did here, and maybe that's the pattern. More times than not, if you get over it, it's a pattern that's shorter, and then you get your correction in the market. It is not a bear sign. I want to make that clear. It is a sign not to be long over the upper Bollinger Band. So you put that all together, and you try to come up with your game plan. And that's basically what I try to do for you each day as we're looking in these markets to see just what is going on. And I do that at 5:30 in the morning. And at 5:30 in the morning, what I do each time is I look at the marketplace and I say, here we are, let's start recording. And I'll go through 40 some odd charts with you in the morning. I'll tell you what's going on in Asia first, in news, what's going on in Europe, the reports coming out. Then we open the charts up because they're open. Remember, in the futures markets, you open up at 5 o'clock at night Sunday. You don't really close other than an hour each day from 4 to 5 o'clock in most of the markets. That doesn't mean that they're all trade that way. The ICE exchange is a little different. The grain markets, they open at 7 at night, then they'll close at 1:30, then they'll open again at 7 at night. So there are some different hours, but most of the big ones, the stock indices, the currencies, most of the metals, interest rates, they'll trade almost 23 hours a day. Come Friday at 4 o'clock, I often start sitting down and doing my weekly video for you. And in the weekly video, unlike the morning one at 5:30, I use only weekly charts. And I give you the longer term picture because that's what you trade a whole different way. You're buying that or selling that market, and you're trying to hold it until you get knocked out on a weekly basis, which is very different than the daily charts. So you put it all together and it's a game plan. How do you get it? It's really simple. To find out, just follow my finger, move your cursor right to the top up here, give it a click. It'll take you into the area that we call our research center. In the research, you can see the different programs we have. Choose which one you like, give it a try. I'm Ira Epstein. You have a good day.